So what is to come in 2019 on the economic and markets front? Breaking it down, this is what FSDH Group thinks. And here is Ayodele Akinwumi, who is the head of research, talking about what to expect in 2019, bringing the economic discussion onto the market street and putting the business environment right in the middle. Let's take a listen.
We note that the outcome of this month's general election may determine the direction of the Nigerian financial market. The actions that happened in January provided temporary fiscal relief for Nigeria. Some of the actions are the U.S. sanctions on Venezuela, which led to the reduction in global supply of crude oil and led to increase in the price of oil. We think that the U.S. may, however, adopt a strategy to increase the global supply to keep price low. You remember what happened last year when they placed a sanction also on Iran. And when oil price began to go up, the U.S. had to devise a means to allow them to export oil to some countries, just because the rise in crude oil price is also not good for them to escalate inflation. So we think that the U.S. may likely adopt a similar strategy this year. We believe that at FSH Research, we believe that there is a need for the crude oil benchmark in the 2019 budget to be adjusted in line with reality. We're talking of both the crude oil price and the crude oil benchmark production. It also needs to build strong structures for non-oil export. Last month, we released a forecast about the revenue that Nigeria may likely derive from oil this year, and we think that it will be lower than what we had last year on account of two factors. Number one, the fact that we expect most forecasts now show that the price of crude oil this year will be lower than the price of crude oil last year. And again, the fact that the OPEC production cuts also affect Nigeria. The Federal Open Market Committee of the U.S. Federal Reserve seeks to maintain its interest rate in January. Market expectation is that the FOMC may not raise rates in the first half of the year. And of course, the chairman of the Federal Reserve System, when they were making the press briefing after the meeting, and then they talked about the fact that they will now be patient. And that's a language that they changed from the usual language of when it will be necessary for them to increase, the interest rates. And so that patience was interpreted to mean that they may not likely increase interest rates within the first half of this year. And therefore, investors who had anticipated interest rate hike in the U.S. in the first half of the year may reconsider their investment strategy in emerging market and developing market, including Nigeria. And that is one of the reasons why we had a lot of inflows of portfolio inflows into Nigeria in the month of January. Part of the reasons there was temporary, stability in the market in that month. The Purchasing Managers Index that the Central Bank of Nigeria published in the month of January dropped, although it was still higher than 50 points, which shows expansion. And FSDH Research notes that the drop is in line with the historical trend of low manufacturing activities, usually associated with January. We observed the downward movement in National Reserve in the early part of February. However, the increase in the price of oil, the additional inflow through the I&E window from portfolio investors led to increase in the external reserve in January, and it provides short-term stability for the value of Naira. We think that the medium-term stability in the foreign exchange market will depend on the country's foreign exchange receipts from both oil and non-oil products. There was a significant increase in capital importation via the foreign portfolio investors in January via the I&E window. This resulted in accretion to the external reserve, just as I mentioned earlier. The increase in the external reserve, supported by the increase in FPI, led to an appreciation in the value of the Naira in January. However, the election consideration this month, the development now in the global market, the issues around Venezuela, and like I mentioned earlier, the fact that we don't think it's going to be permanent. There are temporary measures, temporary crises that we may not necessarily be sustained. These factors may not really allow the exchange rate to appreciate so much. You recall earlier, forecast for exchange rates on account of low receipt from crude oil, on the back of lower oil price, lower oil production for Nigeria this year, may likely make the foreign exchange rates, the Naira, to depreciate a little bit against the US dollar. The equity market continued on a downward trend in January, following the month-on-month appreciation in the month of December. Again, as we noted in our short-term economic outlook that we released last January, we expect uncertainties surrounding the election to dominate activities in the equities market in Q1 and to deter some foreign investors. However, the outcome of the election this month will determine the direction of the market. We also note that some survey investors usually take advantage of the market when there seems to be, when some people are afraid to take positions in the market, and we're already seeing it happening, at least towards the end of the month, January, and even early this month. The strategies that will advise our investors, investing public, to adopt in equities market remains that they should look at companies that have strong fundamentals and they adopt value investment strategies.
Ayodele Akinwumi, head of research at FSDH Group and in a financial services company on Broad Street. Let's now check with the market for today and see how we're starting off with the new trading day. That's coming right after the break. 2 minutes.